Our next story is about a company which has always been seen as a trendsetter, a firm which is synonymous with cutting-edge design and technology, big launches, bigger price tags. I'm talking about Apple, which is credited for putting the internet in everyone's pocket. Ever since it's revolutionized the smartphone back in 2007, Apple has grown to become one of the most influential companies in the world. But today, it's making headlines for all the wrong reasons. In fact, around this time last year, Apple became the world's first company to reach $3 trillion in market value. But unfortunately, a year later today, the tech giant has lost $1 trillion in market value. Its market value has come down to under $2 trillion. So what happened? What has led to this sharp fall? Let's understand some of the possible reasons. 1. Investors are worried that a slowing global economy and high inflation may be hurting demand for Apple devices. Consumers are cutting back on their spending on high-end phones in particular. Remember, Apple devices don't come cheap. According to a media report, Apple has told suppliers to manufacture fewer parts for its earbuds, watches and laptops. Another reason, a change in consumer mindsets. Perhaps consumer taste is changing as the pandemic fears are fading. Case in point, over the first 3 months of 2021, Apple's profits more than doubled when compared to the same period a year before. It's a simple observation. People were home. They were investing in consumer electronics and spending time playing with gadgets. What was once a luxury became a necessity during lockdowns. But now it's a different story. Pandemic fears have died down. People have again started to enjoy their life outdoors. They have started to shift their spending away from gadgets. They want to travel. They want to eat out, not spend more than $1,000 on a phone. And how can we not talk about the supply chain bottlenecks? Like many other tech companies, Apple also struggled with supply chain hiccups. The pandemic-related restrictions, they exposed many vulnerabilities in supply chains. It affected production and caused delivery delays. Now, as we understand, Apple has huge operations in China. The country's zero-COVID policy triggered intermittent shutdowns. It forced factories to close down, and as a result, production came to a grinding halt. Apple had to face iPhone shortages during the holiday season. Would you believe that in some stores, shortages reached as low as 35% of typical holiday inventory? Apple sales and revenue took a hit. Given that iPhones are one of Apple's biggest revenue drivers, the supply chain issues did hurt Apple's pockets. It's evident that Apple's market value has fallen significantly, but also true that Apple has vastly outperformed other tech giants. Apple's competitors have suffered steeper percentage declines. Look at these figures now. Apple is down by about 31% over the past year. Shares of Amazon are down by 50%. If you talk about Facebook's parent company, Meta, it is down 63%. Shares of Google owner Alphabet have tumbled 38%. On that note, let me share with you some interesting trivia. Apple has now joined Amazon in an exclusive club that no one wants to be a part of. A club of companies that have lost $1 trillion in market value. Nothing to boast about. Now, there is no company now with a market valuation of $2 trillion. The tech empire seems to be stumbling. And that's a cause of concern for all of us. But let's not forget, Apple is still the world's most valuable company, ahead of Saudi Aramco and Microsoft, which both slipped from a $2 trillion valuation last year. So Apple's share price may have dropped by almost a third, but comparatively, the company seems to have fared better over the past year. But we can't ignore the massive loss in value. So the bottom line remains, tech stocks are falling, and that's a bad sign for the economy. WION World is now available in your country. Download the app now and get all the news updates on the move.